Hello everybody, Jim Malone here, coming to you live on Dallas Trading Floor, and I hope you're watching us either on YouTube, TikTok, Facebook, or LinkedIn. So we're on all those platforms. We're here, of course, to answer all your stock questions today, but we had a nice day in the market. Today we had my move up finally. I do believe this is still a bear rally, and so you have to be a little bit careful here at this phase in the market, because typically in a down market, which we were in, many of the very most powerful uptrends tend to happen in down markets, and I definitely think that's what we are in now. We're in a bear. We're in a bear market rally. But tonight nice turn up in terms of the stocks. Just want to kind of give you the stock of the day right now. It's the stock of the day is Old Dominion Freight Line. It's not a particularly exciting company, but with continued inflation and supply chain problems, they have pricing power, and it does look like they're doing pretty well. It's coming into a very nice position to buy. The symbol on this one is ODFL, Old Dominion Freight Lines, based in Virginia. But very, very large. Let's slip over to the live chart here. By the way, if you're watching on TikTok, I'm going to switch over and show you the live chart as we're seeing it now. So here we go. We're on for the live chart for Old Dominion Freight Lines. Here's what's happened with Old Dominion. It's come through this cup. It's moved above the 200-day line, and typically you want to buy, when you're buying something, you want to buy it as it's moving above that 200-day line. Definitely the case here with Old Dominion Freight Lines. Now, there is one concern here, and the reason I don't own it currently is because the relative strength line is pointed downwards. It is above 80, which makes this the relative strength of this stock is 86, which makes it in the top 14% of the stocks currently, but it has a downward sloping line. Now, it is starting to get a bounce right at about 300, and of course that's where Old Dominion is. So interesting stock. I'm currently not in it, but it's one I think you probably would want to put on the watch list and see if it continues. We're going to see some more strength probably in the shippers, and this includes both bulk shippers in the actual shipping and in freight lines in trucking. Now, the one area that's probably going to be a little bit weaker, of course, is rail. That doesn't really have pricing power like the ships and the trucks do. So, not really a very exciting stock, but definitely one that you should definitely take a look at. I'll show you kind of what I'm currently in, all the positions that I have that you might want to be interested in. I have currently 6 positions. They're all up today, and for the most part, the market is down. One of my larger positions is in Cheniere Energy. That's LNG. And LNG is one of the largest liquefied natural gas plays based in Houston, Texas. It has 2 natural gas trains, one in Sabine Pass, Louisiana, and the other one in Corpus Christi. And basically what they do is they take natural gas through the pipelines, they then supercool it, and then put it onto ships. Now, they don't actually do the shipping. They put it onto ships, and they send it to primarily to Europe. Europe is in a desperate state of lack of natural gas. As you know, the Nord Stream 2 pipeline has been essentially cut off by the Russians because of the war in the Ukraine. So right now the price of natural gas is moving much, much higher, and but normally this wouldn't be an issue because, of course, you can't ship it typically, but this is all changing with this company, LNG, Cheniere Energy. They basically supercool the natural gas and then put it onto ships and then ship it over there. It's doing quite well. It's up today. After hour, it was up basically 3.77% today. Also up after hours, currently at 167.94. Now I started I started accumulating this back on the 7th, on July 29th, where I came in with a full position. Then I bought another position, another full position, basically in August. So I've been accumulating this stock, and it seems as if it came through very nice earnings. The earnings are up an incredible 323%. Quarter over quarter. So this is called this stock for everybody out there that is looking is LNG. Unfortunately, it is right now extended, so it's a little bit above where the proper buy point is. The top of the proper buy point is right about 158. Currently, of course, it's 167, so it really is not actionable, unfortunately, here. But we're starting to see a lot of the big funds come into this stock. And I want to take a look to see how many funds are in it. I'll give you an actual number here. Yeah, we have 1,749 funds in the stock currently, and that's up over quarter from 1626. So for a stock that nobody's heard of, this is certainly popular with many of the funds. So Cheniere Energy, if we do get a pullback, we may get another opportunity. We may get another opportunity on Cheniere, but for right now, I'm in it. Also, I'm in another petroleum-based company. This is Petrobras. The symbol on that one is PBR, and this is the Brazilian National Oil Company. And believe it or not, it is a very strong company. It's a very, very cheap company because of the price of the Brazilian real. But this is a $14 stock, but it is world class in that it is a major company. And it is the Brazilian National Oil Company, or Petrobras. PBR is the symbol. Currently, the relative strength on PBR is 98. That makes this in the top 2% of all stocks currently trading. Now, this trades as an ADR in New York, which is foreign stocks that are on foreign exchanges. When they trade in New York, typically they trade not as the stock, but as what's called American Depository Receipt. Essentially, it's the same thing, but translated into U.S. dollars. Currently, the ADRs for Petrobras, 1420 in the after-hours trading. Now, it is moved nicely above a cup formation. Unfortunately, this one is extended as well. So I'm just kind of giving you all these ones that are extended. I've been kind of waiting on these, and all of a sudden we're starting to get some action on it. On the sales for Petrobras this quarter were up 46%. The profits were up 111%. The cash flow on this one, $2.23 a share, and it has an incredibly low PE ratio of 2. Now, I did have more of this. We did have a $2.35 dividend on this one, which is pretty amazing, and that's just passed. But this one you should put on your watch list too. I think it's very strong, and looks like going at least into this next year, I think we could see it move even higher. It's had a very nice upward movement. I started buying this on August 1st, and I started basically with a full position on this one, but it's looking very strong, and something you might want to look at and put that on your watch list as well. All right, just a few more here. Another one I just started to accumulate a position in is a retailer. It's Ollie's Bargain Outlet. OLLI is the symbol on this one. It's up today. About 2% on that. It is coming out of this is coming out of a kind of a consolidation, and it has just moved. It just reversed off the 21-day line. Now, why is that important? Well, many times when you can't buy a stock as it comes through a pivot in cancelum trading, you can buy it off of the 21-day exponential moving average, and that's definitely been the case here. Now, interesting thing about Ollie's buys overstocks from other stores. So while stores like Kohl's, that you've probably heard of, KSS is symbol on that one, are having trouble with their inventories are piling up. companies like Ollie's buys those inventories and blows them out for bargain prices. And even though their sales are down and their profits are down, it seems as if there is institutional interest in this stock. We're currently in the June. There's 531 funds that are in this one. Cash flow is pretty strong, $2.84. The price earnings ratio not quite as good as Petrobras. It's 37, but not bad at all. So we'll see how this one does. If it doesn't perform, I will probably cut it, just because. Well, just because. Also, another one that you might be interested in, and this is kind of a trendy stock. This is Celsius. It makes a beverage, an energy beverage. The symbol on this one is CELH. And this has been doing very, very well. What happened with Celsius, of course, is that they got a distribution deal with PepsiCo. And as you may remember, Monster Beverage, this is about 3 years ago, got a distribution deal with Coca-Cola, and that's what basically rocketed them up. Seems like a similar story is happening here with Celsius. This is a little bit more speculative, but last quarter sales were up 137%, which is incredible. That's quarter over quarter. Also, just very, very good in terms of the profits. Let me see if I can shift over to that. Let's take a look at there we go. For the TikTok viewers, you can see it, but for the YouTube viewers, just want to show you this here where I have my pointer. Currently, 415 funds are in this one, and 86% of the stock in this issue are funds. So very interesting. Very high PE ratio, but you expect that when the stock is starting coming out of the gate. 412 PE, which is very high. That's quite speculative. So if you do decide that you want to move into this one, be very careful. Cut your losses very quickly, because it does have a very, very high PE ratio. But it does seem like, now that it's getting distribution, it seems that things are looking pretty good for it. I have one other oil and gas stock. It's Range Resources. Symbol on this one is RRC. This is a smaller company based in Fort Worth, Texas, but it's heavily in the gas, and it's just looking very good in terms of its chart. It's just basically 1, 2, 3, 4, 5, 6 to base, coming out of a cup and handle. Very nice formation. Was up about a little over 0.5% today, off a little bit after hours at 34.31. Currently, last quarter, the sales were up 182%. So those are the kind of stocks you want to be looking for, the ones that are really moving up in terms of their profitability. William O'Neill once said, any stock that can go up 20% a quarter for a year, that's a stock you ought to be looking at if they can go do sales like that. That's definitely been the case with Range Resources. Of course, it's very tied to the price of oil. Now, Range is a little bit different in that it tends to be more gas focused than some of the other ones, doing quite well as well. 652 funds are in this one. 58% of the stock are owned by funds. The cash flow, $3.51 per share. It has a PE ratio of 8. That means the price of the shares are, you get back 1/8 of your money every year. So that's pretty darn good. This is Range Resources based in Fort Worth, Texas. Symbol RRC. Probably not a company you've heard of, but definitely one I think it's worth taking a look at. This one is buyable, and that's what's so key right now. This is buyable. This is in a buy zone. It also has a 100% checklist, by the way. So this is one, if you're looking to move into an oil and gas stock, this one might make some sense. It's a little bit far above the 10-week line, but this one can be purchased. It's the pivot on this one. It's basically right below the pivot, is at 34, so we're right at a place where you can start probably accumulating this one. I do think that we're going to see it move higher based on the price of natural gas. So this is basically right at the pivot, and this is actionable right now. RRC is the symbol on that one. And the last one is a semiconductor company based in Phoenix, Arizona. It's ON Semiconductor. This company, unlike other companies in the semiconductor space, manufactures its own chips. Now, the thing about the semiconductor business, very interesting business, many of the biggest names like AMD, NVIDIA, and companies like that, they do not manufacture their chips. They design them and they market them, but they do not manufacture them. That's done by a company called TSM, or Taiwan Semiconductor Manufacturing. They manufacture about 40% of the world's high-tech chips. The problem with TSM is it's located in Taipei, Taiwan, and of course the Chinese are threatening an invasion of the island. So there's a problem with production with these high-tech chips and the companies that use TSM to produce them. The good thing about ON Semiconductor is that they own their own fab and they do not require any external fabrication. So they have an advantage over other companies in that they can actually deliver. Interestingly enough, ON Semiconductor is primarily engaged in making chips for the automotive sector, and they're very strong in this area. Another company you might want to consider in this area that is also very strong is TXN, or Texas Instruments. They also manufacture all their chips in-house as well. So ON Semiconductor, it was up 7% today, and you can see the money is starting to flow away from some of the companies in the semiconductor industry that cannot produce because of TSM to the companies that can produce because they have their own fabs. And that's definitely the case with Taiwan Semiconductor Manufacturing. So let me just go over these few things and then we'll get right into the questions. Thanks for being so patient. Here we go. So basically, last quarter, the sales at ON Semiconductor were up 25%. And the profits up 113%, which is amazing. There are 1,937 funds in this one. The 71% of the stock is owned by funds, so you probably have not heard of this stock. The interesting thing about this stock, and this stock is a semiconductor stock, but you wouldn't know it by the you wouldn't know it by the PE ratio. Normally, PE ratios for semiconductor stocks are very, very high. This one, the PE ratio is 15. The cash flow per share, $4.15 per share. So it's very, very powerful cash flow. Right now, the relative strength on this issue is 96. So that makes it in the top 4% of all the stocks currently trading on the exchanges. So this is one you might want to consider. Interestingly enough, this one is also at a buy point. Now, let's first of all look at the checklist. It's a 100% checklist. That's very, very good. On the base, it's a consolidation base. The buy point on this one is 71.25. 71.25 on this one. Currently, in after hours, it's 73.50. That makes it right in the buy zone. So this one is buyable right now on semiconductor, and it's definitely in the buy zone in an upward trend. And that's typically how you want to buy stocks, especially in a market like this that is basically overall moving forward, but is in a bear rally. You want to buy things only in an upward trend, and this is definitely the case with ON Semiconductor. So thank you for letting me go through those real quick. Just want to show you the what's happening with the small portfolio, and the small portfolio is something that we do here at Dallas Trading Floor to kind of show you how I'm trading. Currently, I'm half in cash, and in the small portfolio, I have positions in ON Semiconductor, Petrobras, the one we talked about, Ollie's Discount Warehouse, and Celsius Holdings, which is, of course, the drink company. Everyone is up except for Celsius, down just a tad bit. I mean, 0.02, so not very much there. And we're just starting a position in that one. So this is the condition of the small portfolio. We're starting to see it it move higher, but it is it is marching right way. So, well, without further ado, let's get into some of the questions. Thank you very, very much. All right, this is a question from Charles on Exxon Mobil. So let's look at Exxon here. And this is the one, believe it or not, I sold. I probably sold this one early. I did take profits on it, but I was afraid that we were going to get a reversal. And of course, the day right when I sold it, we had a reversal to the higher. So you never can tell. But this one is actionable. I may go back into this one. It seems as if we're moving towards the oil and gas. What I'm going to do here is I'm drawing a reversal line for everyone here, and this is basically kind of showing you where we can come into this. So let me flip it over here for the people on TikTok. This is Exxon Mobil that we're looking at here. Currently, the share price 94.32, and we've just reversed higher, which is good. Very strong results on Exxon Mobil. The relative strength on this is 95, making, believe it or not, in the top 5% of all stocks. So even though this is, kind of this is one of the oldest stocks in the Dow, this is an old Standard Oil company, it is still strong 130 years later. So sometimes these stocks do well over time. But it is buyable on a reversal. Now this is what they call a secondary buy point and not a primary buy point. A primary buy point would be if it moved above the pivot being at 105.57. If it did move above that, that'd be a primary buy point. This is an early buy point, or it's off of what do they call the reversal line. So this is a little bit different. This is a little bit different way of buying it, but it's definitely valid. Definitely valid way to do it, because stocks act kind of like springs. They will come up to a pivot, they will pull back, and then as they pull back, then they will start, the sellers will be dissipated, and then it will move up. So this is a reversal. This is not as good a buy point as off of a pivot, but in this market, this is a good place to get in. I wouldn't get in with anything more than a half a position here, though, just because of the way it's operating. Now, one thing I want to show you on this chart. The relative strength line had been moving lower, but it is starting now to make its move upward, reversing higher. This is not a bad place potentially to get in. The thing about it is you want to be careful. You don't want to go in with a full position. You want to go in like a half position. But again, spectacular results from ExxonMobil. This is one of the reasons why you should consider buying stocks like this, because at least in this market, because right now, because of the interest rates, the market has changed markedly. Back before, when tech was ruling, you could have these PE ratios of like 150 and 160, but now that doesn't fly as well. You need low PE ratios. So right now, the PE on Exxon is an incredible 9. So you look at companies like Apple and all this stuff. They're great, but this is more earnings now. The cash flow per share in Exxon, $10.29, and it's a $90 stock. So it's a 9 PE, which is very, very low. Currently, there's 2,984 fund majors in Exxon stock, and of course, it's a Dow component, so you expect that. But only 32% of the people owning this are funds. So this is very, very mature. But again, this is a dividend aristocrat, and if you're interested in that kind of stock, this one is good. And I do think that we're going to see more people move into this one. So that's a great question, Charles, on Exxon. I definitely think you can buy it. Now, I would buy it, probably hold it, and see if it can get up to the pivot. The pivot, as we indicated, is about at 105. It doesn't have a perfect checklist. It has a 98%, but that's excellent when you consider everything. The pivot here, 105.57. So if you bought it here, you could buy a half position here, and then as it came up to the pivot, buy another quarter, and then when it moved beyond that, buy another quarter. I think that would be a good way to attack this, but it's a good stock, and it's looking very good. This is not a bad place to buy it right now. So that indeed is a good thing. It's good to actually be able to recommend some stocks for a change rather than anything else. All right, Harris, thank you. What are your thoughts about Tesla? Well, you know that I dumped my Tesla yesterday. I got rid of my positions. I had two full positions of Tesla. And I think that what's happening with Tesla is what's happening, unfortunately, with a lot of the tech stocks. It is making a rally attempt. It is moving, but it just doesn't have the juice that it did last year. I mean, I did very, very. Of course, if you've been following me for a while, you'll know that I did very, very well on the stock last year. I mean, I had it was a 10-to-1 gain practically on this one, but it doesn't have the juice anymore. And the part of the problem, and I want to show you this on the chart, is the fact that now, even though it has moved above the 200-day moving average, the problem right now with Tesla is that it has what they call overhead supply. And what that means is there's a lot of, and I'm drawing the line here, there's a lot of people that bought it above the 900 pivot. Okay, that's an old pivot on it. There are a lot of people that bought it up here higher than 900. As it comes up to 900, these people are going to sell and take their losses. So every time Tesla moves higher, you're going to see a lot of pressure to sell it. So that's what I'm thinking. It's just there's too much overhead supply right now. Now, one thing I didn't mention about Tesla is, of course, the 3-for-1 stock split. The 3-for-1 stock split on Tesla basically works like this. If you are an owner by today, if you're an owner by today, you're off record, then you will get three. If you were an owner by the 17th, and it's the 18th today, if you were the owner by the 17th, you would get 2 shares for every one that you own. Now, I sold on the 17th, and the reason I did is because typically what will happen when there is a stock split, the stock will run up, and then on the day of record, that's when it's peak. So that's typically when I will sell. So I buy on the announcement, and then I sell as it comes up to the day of record. And that's definitely what's happened here. I sold it basically at 9:15. It's currently 9:08. And I do think it's probably going to drop a little bit here. I don't think it's going to be dropping out of the sky or anything, but I do think that we're going to see it drop a little bit more here. So probably I'm not going to be holding it into. I'm just not going to be holding it into the split. We'll see what happens after the split, of course, and then there you go. All right, I mainly trade Forex, but for crypto, I just buy and hold some points. Yeah, I mean, I'm not a crypto trader. I typically just trade equities, but that can be a very good thing. So let's go back to the top here. Been PBR, Paps Blue Ribbon, very good question. Actually, PBR is Petrobras, and Petrobras is the Brazilian national oil company, but the symbol is PBR. So go figure. And that is definitely in the buy zone now, by the way. Hey Jim, can you explain a little bit on market direction and what's going to happen? Well, I am not a a fortune teller, that's for sure. But here's what I believe is happening in the market currently. The overall trend of the market is downward. We are seeing that it moved down because from the high that was basically back in November. So what I'm going to do here is I'm going to jump on over to the I'm going to jump on over to the spider, and I'm going to bring that up here. And let's see, we're going to bring up the spider, and then I'm going to just bring up a comparison chart. Let's see if we can do that. All right, so let's look at that comparison chart. Let's see if I can put that in the right place. There we go. All right. So here's what I'm going to do. I'm going to show you kind of what I'm talking about in terms of the market and why and why I'm reticent. Oops, and why I'm reticent on it. Oh, there we go. All right. So as you can see, we have been sort of in this downward in this downward trend. The downward trend started really in November. We then came all the way down, and then we sort of bottomed in June. If you notice, there's been this swing up since then, but I don't trust that because until we reach this level here, until we reach the level of about until we reach that level, we're not in an upward trend. We're still in this downward trend, but we have this upward trend. This is the bear rally that started here. So this is the bear rally. We're in this bear rally now. The question is, when is this going to turn down? Well, I think it's going to turn if we can move on the spider above 106. If we move past there, then it will turn down. Let me show you the actual chart here, so it gives you a better look. You can see that we have this downward trend, and then we bottomed, and now we're making this movement up. But until we can get up here to this dotted line, we still aren't resuming our upward trend. You see, we're still in the down. We're still below the trend. So currently, right now, we are in a situation where we're in a bear rally. So I suspect that we probably will have a bear rally probably into November, and then I think we're likely to see it pull back, but we'll see. So we are not in an we are not in a upward trend. We're in a bear. We're in a bear rally. We're in a rally, but we're not in an upward trend. We're in a downward trend with a rally. So it's kind of a strange thing, but I do expect that we have to be careful. I'm playing this bear rally. We had a nice move today. Typically, these rallies last typically between between about 4 and 20 weeks, and I do believe that we are going to see it move higher, and then probably I think in September I think we're going to see it move lower, but who knows? That's kind of my take on it. All right, Mr. Jeet, let's look at Zim. Zim, of course, is a shipping company. This is the Israeli National Shipping Company, and they are doing very, very well. As you probably know, there's been a huge demand for bulk cargoes throughout the world. And as a matter of fact, for the first time in 20 years, the Baltic Dry Index is moving very nicely. And so shipping companies have been paying huge dividends. And this is definitely the case with Zim. Zim is one of the first ones to break out. But the question is, would I buy it here? Well, the question is, it's coming off of this double bottom pattern. And the question, is it reversing higher? I'd be a little bit careful here. The earnings were spectacular because, of course, we don't have enough ships right now in the world. There are supply chain shortages everywhere. And so shipping is being able to have pricing power for the first time in about 20 years. Cash flow in this company is incredible. This has a PE ratio of 1. Can you believe that? Currently, the price on Zim is $51.55. This had a cash flow of $43 a share. This is remarkable. A PE ratio of 1 is almost unheard of. And I don't know if it'll continue, but I tell you what, it's looking very good. And the question is, can it be bought? Well, I want to buy it above that that 200-day line. I probably will. It's come up to the 200-day line, but it's not there yet. Let's see if I can give you an exact number for that. The 200-day line, 40S, it's above the 200-day line. So, excuse me. So Zim is actionable here. And, coming off a double bottom above the 200-day line is actionable here. I think you could definitely buy half a position. I'm going to put that down. for me, excuse me, I have a crook in my throat. Sorry about that, Judy. But I definitely think this is actionable right here. Zim is actionable. And I probably should be eating some of my own dog food because it is actionable, and I think you can definitely buy it. Will they be able to do the same thing they did last quarter? I don't know, but if they could get close to it, it would be remarkable. Wow. All right, we can't see any chart. We should be able to see it now. There you go. This is Zim, by the way. And just wanted to put it up there. Zim is actionable, so definitely I can see that there. All right, let's take another question from TikTok, and we'll flip the camera. Thank you. All right. Okay. I tried to ask. Okay. Tesla. We talked a little bit about that. I don't think so. I don't think Tesla's probably going to go to 1,000 because of the overhead supply. So I think you'd better be a little bit careful with Tesla. Okay. I strictly use Fibonacci and double bottoms. Oh, very good. Ford. I think Ford is dead. I wouldn't be in Ford. Let's take a look at the chart though. For Ford. I don't think this is really one. And I don't want to show you why. I think you better be careful with Ford. And part of the reason is, with Ford, we just came up to a 50-day moving average here, and we were turned away. So that's not a good sign. We'll see if it gets support at the 10-day line, but that is not a good sign. It came up, and then it's getting resistance here. The 200-day moving average is still in a downward trend. It's just slightly downward trend. So I think Ford, unfortunately, is not doing very well. So I would avoid it personally. I would avoid it right now. All right. KO. Do you see a golden cross, or is it just me? Okay, good question. That's a good question. By the way, what a golden cross is for everybody out there is that when a stock crosses, when the 50-day line, the 50-day moving average, crosses above the 200-day moving average, that's what they call a golden cross. A golden cross is something that you can look at to see what the general trend does, and that's typically a good, very strong buying signal. That's a very good buying signal typically for a stock. Now, for Coca-Cola, I'm going to jump on over to the weekly chart to kind of get a little bit higher level view. It does not appear that we have a golden cross. Let me see if I can. Yeah, a golden cross. Because the because the 50-day line did not cross above the last time we had a golden cross. Well, as a matter of fact, we have not had a golden cross on the 50-day line. Has always been above the 200-day line for a long time. So no, unfortunately, no golden cross on Coca-Cola. Let's see if we can find one that does have a golden cross. I believe Zim does. Let's take a look. Let's see if we can. I think Zim does. No, that's a death cross. Yeah, no, that's not right. So no golden cross on KO. Sorry about that. And unfortunately, no golden cross there. I wish it was, but it's not on there. Let me see if I can find a good example of a golden cross for you. Trying to think of a company that would have one. Let's look at Celsius. No, that's too new. Let me look at On Semiconductor. I think that might have one. Let's take a look. Okay, yeah, this is a golden cross. Let me show you this. Markup tool. What I'm doing is I'm taking off my markups. Now, what a golden cross is this red line here is the this red line here is the 50-day line. Now, back here in June, the 50-day line fell below the 200-day moving average. That is what they call the death cross. But it's turned around and it's very close to moving above that 200-day line. Once that happens, that is a golden cross, when it goes above that. And as you can see, this is one of the reasons why I'm so interested on semiconductor. I didn't show you I didn't show you the chart. This red line is the 200-day moving average, and as you can see, it's moving up, and it looks like it may cross above the 200-day moving average. If that indeed is the case, if that happens, that is what they call the golden cross. And what the golden cross for chartists, people that are chartists in the stock market, is a sign that we're going to get increased accumulation from big funds. And so the golden cross is a very good thing to look for. That's definitely what's happening here with On Semi. This is one of the reasons why I'm holding it, because it looks as if it's just about ready to come above that. And when it does, of course, that's a good thing. You'll notice that there's lots of acquisition in terms of buying here, and this red line here, this is the average. So anything above this, remember this is an exponential chart here, anything above this is very, very high buying. So that's what you want to see. You want to see the 50-day line move above that 200-day line. That's the golden cross, and that typically will show accumulation. So kind of an interesting thing there. All right, we probably have a time for about another one or two questions. Let's go to TikTok and see if anybody is interested here. Okay. Crypto. All right. Love listen. Oh, thank you very much. I appreciate you listening, Sergio. Appreciate it very, very much. Ford. Okay. Unfortunately, I can't recommend Ford. I wish that I could. I love Ford. I drove their cars for a long time. But unfortunately, I don't think it's a stock to own right now. But I only look at watch them to, and I get market direction. All right, Tesla 1,000. I don't think it's going to hit 1,000, unfortunately. Just trade a. Oh, one stock I want to show you, and this is one that everybody knows, but I think I want to point it out because it's so critical, and that's Apple. Apple has been coming off the bottom, and it is actually looking very good. I will be, I should have been in this one. I mean, I knew about this. Again, it's like everything else. You know it's coming, and if you don't make an action at the right time, you lose. This one This one has the potential. We talked about the golden cross. Well, notice how this line, this 50-day line, has come down below. Notice how it's starting to come up. This thing is in the beginnings of a golden cross, and this may come above here. You can probably still buy Apple at this point. I know that's unbelievable, but you probably can still buy it. It's 90 relative strength, which is excellent for a stock this large, and it just moved right up. Now the question is, will it come up when it comes up to the pivot at 182? Is that where you want to be? Well, I'm going to start probably jumping into Apple now that it's resuming its movement up. You can see that it came up to 182 way back here in December, right in January. So it's taken a whole year of this consolidation. This is a whole year, almost, well, not a whole year of consolidation, 8 months of consolidation. So it's definitely consolidated. So as long as we stay in an upward trend, Apple's likely to go higher. But it's taken 8 months for that to happen. So there you go. So this is something that you want to put on your watch list. I'm not in it yet, but And I did sell my Apple, back last year when we did when we started to pull back. I did sell it, so I'm ready to probably start jumping back in again because I think it's likely to move higher. Well, thank you everybody. Thank you so much for watching my little show. I'll be back tomorrow. And I think we did Apple. Yeah, thank you, Mr. G. No, ARLP. Let's look at that one first. ARLP. And can I get an idea here? Oh, license engaged in the transportation. Coal. Okay, I like it too. Yeah, coal's been very, very strong. This is a little bit extended, but remember, because it's a resource stock, it's not doesn't quite follow the same rules as the others do. But this is extended, so I probably wouldn't be a buyer. But boy, I like that relative strength. It's a 99. This is an interesting. Look at the demand for coal. It's absolutely amazing. It's got a PE ratio of 10. That's excellent. Cash flow is $3.46 a share. It's $24 stock. And the profits were up 284%, 80% last quarter. That's kind of amazing. Return on equity 16% overall. There's only 33 funds in this. Isn't this amazing? This is one of the most underinvested areas on the stock market is coal. Everybody hates it, but everybody wants it. Boy, that is so interesting. There definitely is lots of political manipulation here. Europe needs coal like yesterday, and of course, the people that are in the solar business, of course, are suppressing that. And that's understandable. It's very obvious in these charts. Interesting. Well, this is a good one. I wouldn't buy it. It's extended, but I do like the stock. So ARLP, definitely put it on your list. Last one, Enphase, and this is actually a solar stock, but But I believe, I think this is Enphase, ENPH, but I believe that this is the power inverters. Yeah, this is power inverters. This is interesting. This is an Israeli company. I like this company. These guys do not make the solar cells. They make the power inverters that turn the DC into AC power. And this one is doing extremely well. It's got a PE of 91, but remember this is a little bit more techy. 98 relative strength. Selling off. I probably would pass on this one, though, for right now. I would probably pass on Enphase. I would probably pass on Enphase right now. I just don't think it's as well set up. I have to say, I like ARLP a lot better, just because it's a pure profit play, and there definitely is a shortage of coal, and that is for sure. Okay, well, thank you everybody for taking a look. I'll be back tomorrow at 5. Everybody, if you're not already, if you haven't already liked my show, I'd really appreciate it. It really helps me out here. So please like the show. I very much appreciate that. And also, if you're not already a member of the Action Trailer, it's very easy to do. It's free, by the way. And you can just go over here to www. Dallas Trading Floor. So that's definitely the thing to like. And I will be back tomorrow at 5 again. Everybody have a good day. Stay safe, and I will see you back here tomorrow.